Hi, good afternoon, everyone. Thank you for joining in for the quarterly investor update for Kotak Private Credit Fund. You would have received the note that we've sent out for the update for the quarter. If you can flip to the first page, Anupam. Yeah. So just as a recap, as you remember, we closed the fund last year with a total fund size of 1751 crores. We are currently clocking about 17% IRR on the fund. As we had promised, we've actually deployed the whole fund, 1,830 crores, but there is about 20% of capital still not called from you, and I'll come to that. The capital called from investors is about 1,400 crores as of now. And the reason for not calling that 20% is because this quarter itself, we've done deals worth about 650 crores. But 450 crores of capital principal came back from two of the deals that we had invested in. So first, let me talk about the exited investments, and that will put color to this cash flow. And then I'll talk about the existing and new investment. So the exited investments, we briefly spoke about GMR when we did the quarter update for December also. This was a very short time held position. Fortunately, we did get paid out for a minimum number of months. And hence, last quarter, you saw an aberration in the IRR that jumped to 18%. This gave us the ability of not distributing this back to the investors and then calling it back after 1 or 2 months. So instead of giving you back this 250 crores and calling it back after 2-3 months and creating a full mess in communication, we got paid out for the holding period on this return of capital. And we had this money in the bank for about 2 months, and we've just recently deployed it, and I'll talk about that. Second position was Resultix, which was an IT products company. You remember there was a two-layer structure. There was a Singapore parent company, and there was an India business. And we had invested in the India business. Late last calendar year, the company had come to us asking for approval to raise additional about 350 crores in the Singapore parent. And while conceptually we were okay with it, but we were okay with it only under certain terms. The terms at which they wanted to borrow was diluting our position in India and was kind of making us junior in terms of cash flow to the Singapore potential debt. There is a bit of legal complication here in terms of, because it is a Singapore entity and there is an Indian subsidiary, any charge that we create across the whole group, we have to take RBI approval, which we also took mid last calendar year. I think May or June or something, we got that RBI approval also. But given the whole commercial position, we were not very comfortable allowing the company to borrow at Singapore level. The effect that was having on the company was it was slowing down growth. While the company had moved from about 200 crores of EBITDA to 250 crores of EBITDA, it was still growing, but it needed more capital. And then after almost a 3-4 month discussion, right, we did not want to stick out and say that, look, we are vetoing your growth further. And we said that rather be in an acrimonious situation, we said that, okay, we would rather exit peacefully from the company, and we would rather still make our IRR. That is a position we decided sometime in the end of December. The company in January came back to us and said that they are happy to repay our whole position. And I think in about mid-Feb, right, we got paid back our full principal with about 18% IRR, which is a little higher than our contracted IRR actually. And we were happy with the fact that, finally, the company was able to finance themselves in a proper way with a proper structure. We were effectively refinanced by two funds. At Singapore at India level, Bearings India, which was an Asia fund that came in. They did both Asia, they did both Singapore and India. And in India, Anicut Capital came in. We were not okay with the junior positions. Other lenders were okay with the junior position. That's their own call. So we preferred to exit, and two other funds have effectively taken us out. So when we started this quarter effectively, we started with 450 crores of cash in the bank. That's where we started. And then strides of the 50 crore OpCo position, 25 crores had come back last year. 25 crores came back on 31st March, or I think early April. No, came back February end. March end, yes. Yeah. So 31st March, I think it came back. So effectively for the whole quarter, we had 475 crores in the bank that we had to redeploy. Karuna Ventures is one of the Strides Group's holding company, 30 crores. That we can ignore because we've recycled that money back in the group itself, and that forms a part of the new investment. So that we can ignore. So effectively this quarter, we've got back 475 crores of cash to redeploy. We had two choices. We give you back that cash and ask for that cash back after a few months. And most investors don't like it. So we took a call that we'll redeploy it, even though we may be sitting on that cash for about 1 or 2 months. So with this thought, this quarter, we've actually done 3 investments. First one is in TVS Mobility. This is a part of the TVS group that is run by Dinesh. It has a listed company called TVS SCS. I will let Anupam talk about that deal a little bit more. The second deal we did was with this company called Alaknanda Hydropower. And third is within the Strides group, we've actually increased our exposure by 150 crores. So these are the 3 things that we did this quarter. We've deployed 650 crores. This quarter effectively has been an extremely busy quarter, more deals that we saw in the pipeline, but we still try to stick to larger entities and larger positions versus doing smaller mid cap or small cap type of positions. So I'll let Anupam talk about TVS and then I'll cover Alaknanda.
Sure. Good afternoon, everybody. Hope you're doing well. So just to add to Neeraj's view, we invested 250 crores in TVS Mobility Group, which is promoted by R. Dinesh. We have a holding company position here. In the group, the main company here is TVS Supply Chain, which is listed in the stock exchanges with a market cap of close to 5,500 crores. It is India's leading logistics provider and third-party solutions provider. Does about a sales of 9,000 crores, EBITDA of 700 crores. So our position here at the holding company has a security basket against pledge of shares of the listed company, real estate guarantees from the group. So we are extremely comfortable with the counterparty here. We have a relationship going back 5 years. We have seen Dinesh closely execute and bring and scale up his companies. And overall, it is a 3-year position for us here. At a very attractive return. So we made this investment in February for 250 crores.
Yeah. And as Anupam said, we've actually done business with Dinesh before from the platform. We've invested with him in the holdco. We've got exit very well just before the IPO. So we're very comfortable with him. I've personally done 3 deals with him when I was at KKR. So, it's a great counterparty to actually do business with. Second one is Alaknanda, which is a hydropower asset. It is part of the GVK group. The holding company has a few issues at the top, but the business is really good. The business is based in Uttarakhand. It has a 21-year PPA extendable by another 20 years. And it has about 614 crore EBITDA right now and is levered about 3.5x, which is extremely reasonable and low from a hydro long-term renewable type of asset. We have actually refined the whole capital stack of the company right now. There is a cleanup required at the OpCo and at the HoldCo. So we, as a group, as the whole Kotak group, we have refined about 1,700 crores out of the total debt stack of the company. And the other lenders who have refined the rest are also people that we've brought in. Of the 1,700 crores, we as a lender from KPCF hold 250 crores. It is a unitranche. What it means is that all lenders have the same rights. They are equal in rights and obligations from a company perspective. And we will make good, I would say, late teens IRR on this asset as we go along. This is a long dated structure that has been written. It has a put in about 5 years. We have an option to sell the asset earlier if we want to. We believe that the run for this asset will be about 3 years. The business is throwing up enough cash, just like the position that we had in Ratan Power. We think that this position should get repaid or refi in the next 3 years. Most of it should get repaid from the company cash flows. Some bit that will remain will get refied at a much lower cost, we think in about 2 to 3 years. Between the second and third year is when we expect the refi to happen and for us to get out. So I think from our perspective, it's a great deal because that matches the timeline for the exit of our fund. The third one is Karuna Ventures. Karuna Ventures is a Stride Group asset, as we spoke earlier. The Stride Group has done, one of our early positions in the fund was the Stride Group at the OpCo, and then we invested with them in the HoldCo also. There were certain things that we wanted the group to do, and we had some understanding with them almost 18 months back. We've been very happy with the way they have executed their businesses in the public domain and in the private domain. Today, now they have 2 listed companies. They have the Strides Pharma Limited business, and there is OneSource, which has just got listed. Strides Pharma has a market cap of about 6,000 crores. OneSource has a market cap of about 18,000 crores. And there are other API businesses also within the group. There is a smaller API business called Solara, which is also listed. About 18 months back, whatever we had agreed with the group, they've actually executed all that very well. They've also sold down a few assets, listed OneSource. That has created a lot of liquidity in the group. I think the group has repaid something like 600 crores of debt, between 500 and 600 crores of debt this quarter when I say this quarter, I mean March quarter to lenders, and has significantly brought down the debt to total assets and also liquid assets in the group today. With that improving position, and given that we've had a very long relationship with them, we've actually decided to increase the exposure in the group. So we have an existing position of 150 crores, which is written as Tenshi Pharma, the number 2 asset in existing investment. So we have existing 150 crores in Tenshi Pharma, and we have Karuna Ventures, which is 150 crores. That takes us to 300 crores to the group. We may do a little bit more also if we can. The idea is to consolidate more debt with us if we can. We will not cross maybe 25, 30 crores from here, but we've taken it to the maximum thing where we can in the portfolio. It's a fantastically operating asset for us. We make good IRR on this. We are under obligations to disclose what kind of IRR we make on this asset, but we're very happy with the whole risk and return on this asset. We earlier used to have a combination of some unlisted shares and some listed shares of the group. Now we actually have, we're very happy that we've exposed ourselves to both Strides Pharma and OneSource listed shares. And that gives us even more comfort because now we have the exit options for both for us are actually twofold within the two listed companies, right? So that is the Strides Group new investment and existing investment. Ratan Power, we've spoken about a fair bit in the past. It's almost an exited position for us. It is we started off with 150 crores. We are today at 147 crores, about 3 crores pending, which also we think will get paid out sometime in May, if not May, latest by June. Company continues to throw up a lot of cash. This was the lowest IRR asset in our portfolio, which was 14%. And when we are redeploying it, we are actually redeploying it at a higher IRR going forward. Hela Infra Market, as you are aware, we had done this deal in August 2023. No, August 24. Sorry, August 24. And we had done it against Shalimar, stock of controlling stake of Shalimar Paints as pledged to us. And we make very good IRR on this asset. The business has actually done much better, but there has been a lull in the tier 2, tier 3 market, and we have seen a little bit of increase in working capital in this business, which we are tracking very closely. But the business is today has raised about 1,000 crores of pre-IPO money and is going to raise probably a little bit more. I know some of the family offices actually also own equity now in this business directly as part of the pre-IPO round. I think the company will file for an IPO based on March numbers. Earliest, I think the company can hit the road. My personal assessment is August, maybe after the summer holidays when institutions come back and look at deals. So maybe somewhere between August and Diwali, you could see an IPO for this asset, but we'll see how the market actually pans out. But they haven't filed for the IPO. They will base it based on March numbers. So I think sometime around May, they will file. They'll probably get their approval in June end or July. And then August, I think they will be ready for IPO. That is the estimate that we have. Company based on what company has told us. Business today is about 1,400 crores of EBITDA and is below 3 times leverage, which is a very good sign because when we entered this position, while we had a ring fence security, business was operating above 3 times leverage. With this higher EBITDA and 1,000 crores of equity raise, the net debt has come down significantly in the business and is operating significantly below 3 times leverage today. Trishashna Holding is the holding company for Satin Credit Care. As we had explained earlier, this is a deal that we've done at a promoter level. So while we are not in Satin Credit Care, we have cash flows of the holdco and some other assets that are ring fenced for us as security. But of course, the fortunes of the group are connected to Satin Credit Care, and that is a listed company in microfinance that we continue to watch very well, very regularly. This business, Satin Credit Care, as compared to most of the other microfinance businesses in the sector, have done very, very well. We do monthly monitoring of this asset. Given it's a listed company, of course, we can't get numbers every month, but we try and check trends. We keep talking to people in the market to check where the business is growing. The business had, in my view, a bottom somewhere around between January and February. Disbursements had slowed down. They had done a great job by actually pulling back from the market, reducing their NPAs. So we were very happy with the actions that they had taken. I think they've recently done a long-term debt of about $100 million in Satin Credit Care, the listed company. And that gives them a lot of room to actually expand the AUM from here on. And as part of that $100 million debt raise, there has been a few foreign institutions that have also come in. So I think the business has done the right things. We actually originally had a structure where they will not pay us any interest up to June 2025. So there was a 1-year moratorium where they will pay us our first installment for interest in June, and then they would pay us every quarter after that. But given the whole noise around microfinance, the company itself came to us and said that why don't we start paying you some coupon every month, because we have free cash flow sitting in our Holdco. So they are actually paying us a coupon every month on effectively whatever free cash that they have every month. They are paying to us, right? So I think the June coupon is almost paid. June coupon is almost paid out till now, and they will continue to pay us monthly coupon. While our contracted is quarterly coupon from here on, but they've been paying us now monthly, effectively monthly coupon. So we're very, very happy with the conduct, the actions that the company has taken at Satin Credit Care and at the promoter level. It's a fairly conservative group in that sense. Earlier, investors saw a monthly cash coupon being paid out, and that the early investors will know that that has reduced over the last 1 year. That monthly coupon that used to get paid out was largely because of our position in Ratan India. And as the principal position in Ratan India kept coming down, the coupon payments also kept coming down. So we've been very focused to fill this back up with something where investors get some monthly coupon back also, right? While on an annual basis, we are still at 13% coupon that we pay to investors. But part of that, we were very focused that gets paid out even on a monthly and quarterly basis, right? So with that thesis, we now actually have two assets that are monthly paying. We have Alaknanda Hydro. It's a monthly paying, coupon paying asset. And Trishashna, while it is not contracted, but it's actually also a monthly paying asset right now. So from April month onwards, you will see a pickup in coupon payments back to you. While on an annual basis, it's still the same. It will be out of 17% IRR, about 13% gets paid out as coupon. Balance will be back-ended as positions get cleared out. But, on a monthly basis now, you will start seeing a pickup in coupon again. And Anupam will cover this as we go along. Yeah, so this is about new investment and existing investments that we did from the fund this quarter. Let's just leave it there. Yeah. So a couple of high-level comments. One is, I think this quarter we've broadly seen a pickup in the number of deals. There was some bit of sluggishness towards the end of calendar year last year. But I think from February, I think we've seen a fair bit of pickup in deals. Quality of deals, risk-return match is still a little mispriced in our view, but we are generally a little bit more conservative from the market. So sometimes it's, we think we are being more conservative than what we should be. But we are still finding sweet spots in large assets with our return thresholds where we can play and be meaningful. This quarter, you see that we've done three deals. All three of them are in large groups. The next two deals that we do, right, probably will be in mid caps, right? And we think that, so we have one IC approved deal already, which is about 150 crores. We have some bit of money still in the bank, so we will use that to fund part of that deal. And the next deal that we do we have two choices. Either we do one consumer deal or one auto deal. So we'll do one of the two to close our total investment in the fund. We think that we will do our next capital call sometime in the next 2 weeks or so. and the amount should be payable, I think, sometime in May, and that will bring close to the total capital call on the fund. Just to reiterate again, we've already invested 1,830 crores, right? But on GMR and Resultix, we got money back, and that has got reinvested, and that's why we've not called for capital. But otherwise, as we had envisaged, we finished our deployment of 1,800 crores within the March quarter, as we had envisaged. I think on the portfolio, just one more high-level comment. There is a lot of noise around tariffs and interest rates that brings a bit of uncertainty in the business environment. I think on interest rates, look, there are multiple schools of thoughts. Interest rates should come down ideally. I don't want to play the guessing game which way it will go. There are today too many factors affecting exchange rate and interest rates. I think we'll have to wait and watch over the next 6 to 12 months what really happens. Ideally, there should be a sliding scale to interest rates. It was expected even earlier. It's not happened yet. So I hope that this year, interest rates will come down, which effectively means that this kind of product makes much more sense for you as an investor. Right now, it is probably generating 4 to 5% additional alpha to all the other debt investments that you can make on a net basis. If interest rates comes down, we think this is going to generate maybe 6 to 7% additional alpha to you, right? So we hope and we think that interest rates may come down, but nobody knows. Second is, I think, on tariffs, right? Everybody's focused on it. Nobody knows what is the impact of it finally on India, whether India will be a beneficiary, will effectively have an impact. There are pockets where we are definitely beneficiaries, in my view. If you look at our portfolio, actually, there is nothing that really affects on tariffs for us. There is one group that is directly impacted on exports, which is the Strides Group. Strides Pharma has a large US business, and OneSource, which is the other listed company, has a large European and US business. Currently, pharma and pharma formulation and API both are exempt from tariffs, and nobody's talking about them, but we never know. There has been some noise that the tariffs may come. But the reality is that a lot of these molecules that are being supplied are necessary from US capacity perspective. So we think that there should not be any major impact. Other than that, TVS Mobility is the other one that has an international business, but it doesn't really have export from India. They have UK and US businesses, which are logistics businesses operating in those geographies. So we don't think any large impact because there is no cross-border sale happening in TVS Mobility as such. Resultix used to have a large US presence, but again, it was services. But we are anyways out of that position, so that doesn't matter. We don't think there will be an impact even on, there should not be any large impact on Resultix also, but they're anyways exited. Yeah, so that's a little bit about the fund and where we are. Anupam, any further comments you want to add before I open it up?
No, I think nothing further to it.
Okay, so happy to answer any questions that you all may have. I don't see any questions in the box yet, but happy to answer any questions that you all may have. Yeah. The question is, are we expecting any major repayments in the next 2 years? So if you look at our portfolio, yeah. So I think there will be smaller amounts. I would presume at a fund level, there is about 10 to 15 crores coming back during the current financial year, which at a fund level is very small. It's a small percentage. Other than that, whatever major repayments we saw, which was GMR, Resultex, Ratan Power, all that money has come back. In fact, Stride came to us with a check of 200 crores to repay all our positions, and we've been able to hold it and recycle that back. So whatever major repayments we saw, we've actually recycled that. And what that does for at least larger investors in the fund is a lot of investors actually like that we are actually recycling that capital, because the total quantum of interest that we pay out to investors is much higher, right? It is not just the IRR, but the total amount of money that we make for you, the total value of money that we make for you as part of this investment is much higher. There is a term which is called MOIC in the fund industry, as many of you may know, which is money on invested capital. On that ratio, we are currently tracking at the highest level amongst our comparable funds. We are above 1.5x. So when we finish the fund, for every rupee that you've invested with us, we would have given you back more than 1.5 rupees in totality. So to answer the question again, sorry, in principle, we don't think major amount is coming in the next 2 years. In the third year, you will see a lot of repayments. But total interest that we have paid out till date, I think is about 200 crores, right? What's the number?
So 160 crores.
Yeah, at a fund level, we have paid out total 160 crores of interest already, right? So if you look at our average period of investment right now, the 13% type of coupon that is getting paid out, it's a significant quantum as compared to other funds also. Hela Infra, once IPO comes, all our investment will be prepaid. We've had some discussions with the company. I would not like to comment on it. We will try our best to hold the position in Hela Infra as we go along. Yeah, we have a very specific question on Alaknanda from one of our investors. Yeah, so I think it's a very long and specific question, right? So there is, as you know, the GVK group is facing issues. The asset is actually fantastic. There is also, so there are some issues at the holdco level of this asset. The asset is fine, right? But the asset will be rated low because of issues with the promoter. The asset, as I said, is operating at 3.5 times, about 3.5 times leverage, which is great from a hydro renewable business and from a cash flow perspective. So firstly, as lenders, we have cash flow ring fencing on the asset. So we have control over the cash flows of the company, which is what gives us comfort and which is what gives us ability to control the asset if something goes wrong, right? Issues at the top. Finally, end of the day, right? We can say that whatever happens at the top, doesn't concern us, but that's not true, right? In reality, whatever happens at the top does affect the company, right? And there are certain steps that we are taking to resolve the issues at the top. I'm not at liberty at this stage to discuss that in detail, but hopefully in the next quarter call or the one after that, we think it'll probably take between 1 or 2 quarters to resolve the things at the top. And given that we hold as a group 1,700 crores of debt in this asset, it gives us significant control, right? We effectively hold 70% of the debt ourselves as a group. So for us, right, we've got at least 10 calls from the market for people to buy some part of this position across different funds, and we've tried to keep it within the Kotak group so that we can retain more control over this asset. So the answer to your question, sir, Mr. Cheda, is that look, we need control over this asset. We've got that control with controlling the majority of the debt stack in the company. We are fairly aware of the issues that are going on at the holdco, and we think it will take 1 or 2 quarters to resolve that. We are actively engaged even in that resolution. And that's the reason actually why we are making this kind of IRR on this asset. Otherwise, on a hydro renewable asset, the IRR is like single digit or like maybe 10%, 11% maximum that you can actually get. So from here on, no more reinvestment till maturity. Yeah, so I think the next question is, so from here on, no more reinvestment till maturity. As I said, there is no major amount coming back, right? So the question is not that relevant. But let's say if there's a major amount that comes back, we will reinvest it back, right? We don't see anything coming back right now. But if anything above 50 or 100 crores comes back, let's say in FY26, we will definitely want to reinvest it back. If money comes back in FY27, I don't think we'll want to reinvest it because then it's very close to the exit period of the fund. That's the way philosophically we are thinking about it. But we are not seeing, we ran the math recently. I think the total amount was about 10, 12 crores that comes back in FY26. Yes. Yeah. So if the amount is that small, 10, 12 crores, then we'll just we'll distribute it to the investors. Anything above 50 crores as a chunk, if it comes back in FY26, we'll reinvest it. I think there are 3 or 4 questions, so let me just take them one by one. Yeah, so Mr. Mehra, at the cost of repetition, let me just say that for the next drawdown, firstly, we've invested 1,830 crores worth of deals already. Due to some of the amounts that have come back, we've reinvested this capital. This quarter, we've done deals worth 650 crores. And we think that the balance amount will get drawn down, payable sometime in April. So over the next 2 weeks, we think we'll do the call. And it should get paid out sometime in May. It'll get paid out sometime in May for you. So we think that over the next 2 deals, one which is IC approved and one another deal that we are looking at, between the 2 deals, we'll close the fund. Yeah. So second is monthly payments. I think you joined in late, as you said, but I did explain it, and I'll let Anupam talk about the exact numbers. But we had only one monthly paying asset in the portfolio, which was Ratan India. As you can see, the AUM on that has come down from 150 crores to 147 crores. So it's almost got paid out. And that's why the reduction in monthly coupon payments. This should come back up again because now we have 2 assets which are monthly paying. Alaknanda is a monthly paying asset. And while Trishashna is not contracted as a monthly paying asset, but they are paying us monthly interest as of now, right? So we effectively have Alaknanda and Trishashna both that are monthly paying assets for us, and you will see a significant increase in the monthly coupon that gets paid out. Yeah. Could you explain how the exit on some of the investments is way beyond the fund tenure? Yeah, so if you look at the portfolio, Alaknanda, I think, Mr. Mehra, you joined late, but I did explain this, that the structure is written as a long-term debt. But there is a put option about 5 years out, which is still beyond our fund tenure. We believe this will get refied between the second and third year from here, right? Because the business is, as I said, about 3.5 times EBITDA level. in about 18 to 24 months, this debt should be 40% or 50% lower because it's a high free cash flow generating business. And then it should get refied. Whatever is left out, should get refied at the end of that period or in the third year at a much lesser cost of capital. If for whatever reason it doesn't get refied at the end of third year and we are ending our fund tenure, we have the option of selling this in the market, and we think that this is easily sellable at that point in time. Anupam, do you want to take the math on monthly numbers while we are still on that question?
Yeah. Yeah. So this quarter, if you see the from Jan to March, we have distributed 57 crores of income. This is also part of the large part of this. I'll just
Why don't
take
you
it.
go to the last page?
Yeah.
Yeah. Yeah.
Yeah. So this is a representation of an income to an investor who had invested, let's say, with 2 crores and 10 crores and had come in the first round. But broadly, from at a fund level, between Jan to March, we have distributed 57 crores of income. A large part of this has been the has come in through, as Neeraj said, through the exits on Resultix. The redemption premium, the IRRs that we have achieved on those exits have been returned back to the investors as income. The capital, of course, we have retained, as Neeraj mentioned earlier, and redeployed them for making the 3 new investments.
No, just talk about it. This is just income statement. Right? Let's just talk about interest, income. We are not talking about principal. Principal we've covered already, right? So this table is just about interest, right? That's
Yes.
how it's distributed.
Yes. So in Jan, as a representation, if you see across months, Jan, Feb, and March, we have paid down income, but the trajectory has gone down. And this is, as Neeraj explained, as mainly because of Ratan, the outstanding exposure going down. This will, of course, going forward, be replaced by 2 deals which we have done, which are going to pay interest back to you on a monthly basis. One of us is Alaknanda and the other is Trishashna.
Okay. Sorry, I'm just looking at the balance. Yes, I think the next question is how much we feel confident to deliver gross XIRR as estimated. What would be the outlook due to competition? Look, I think from our perspective, as you can see, 80% of the fund is already locked in, right? At the IRR at which we have estimated. We had promised for between 14 and 16% to investors. We are clocking at 17%. The 2 deals that we are looking at are also beyond mid-teens, right?
Yeah.
The average will be in this range between the 2 deals.
That's right.
So we are reasonably confident that it will be within this range, maybe 50 bips here or there, right? I think we should end the fund somewhere between 16.5 to 17% gross IRR at a fund level. In May, you will draw down the entire balance, which is uncalled. Yes, Mr. Puri, I think we will draw down the balance 20% that is uncalled. We expect it to get called in May and to be paid in May sometime. As I said, one of the deals is already IC approved, and the second one is under process.
Yes.
So I think for these 2 deals, we'll call capital and we'll close the fund. Yeah. That's all the questions that I have on the box right now. Thank you again for participating in our fund. Once we are fully deployed with the fund, we will also come to investors with our second fund, sometime this calendar year itself. Anupam will be an integral part leading some of the investor calling as part of that fund. And if you have any further questions, us and the operations team on your account statement, etc., is happy to answer anything that you need. Thank you very much again for doing this on a Friday evening. Bye.
Thank you.